A busy, good hour. Liz, thank you very much. We'll see you in a couple of minutes. Let's get straight to today's action here on the East Coast. We have Peter Kenny, his Knight Capital Managing Director. His warning of increased volatility says investors have to get defensive. Ron Weiner, RDM Financial Group CEO, whose last stock pick is up 8% since he told you to buy. He's back with more plays, how you can make money. And Larry Shover's in the pits of the CME. Larry, I want to start with you, and let's start with the Fed. I mentioned the Fed meeting. They hunkered down today. Tomorrow they're going to come out. Any expectations from traders there about what the Fed might do?
Well, I think the expectation is there's not going to be any major policy change, although vernacular will probably change, and that's what we're looking for. The labor market, they need to come out and say it's frustrating. They need to say something with regards to the inflation discussion that we're talking about. Is it disinflation or deflation? And the game changer, something that will really help everybody, is maybe the new exit strategy would be for them to be a coupon clipper. No sale, but they're going to continue to be coupon clippers, let the balance sheet run off. I think that's what people are looking at.
All right, but wouldn't that alone spook the market, Larry?
I think it would, but at some point, I mean, this balance sheet is so gigantic, so enormous. We have no experience in dealing with a balance sheet this big. At some point, we have to come to terms with dealing with it.
So, Peter, if all the Fed does is clip coupons, they don't buy anymore, they just let these bonds expire, would that create a market downturn?
Well, it would certainly create volatility, and the likelihood is that the default action would be lower, because it shifts the policy focus from an extension of current policy to something that's less supportive. In this particular context, equities. It's a distinct possibility. I'm not expecting it. I think we hear more of the same. But let's face it, the jobs employment gains that we've seen have got to frustrate the Fed, and there has to be some sort of vernacular adjustment to address that.
Well, and Ron, that's the point, is that other than the stock market itself, which loves easy money, and perhaps the real estate market, we have seen a real estate boom. Some of that is due to the low interest rates, although, frankly, they were low enough before when people weren't buying. So what good, other than pumping up the market, has the Fed actions done?
The Fed's idea is just to drive money into risk assets. They're doing it. Not just this Fed, but 3 other Feds around the world. First time ever. You can't fight 4 Feds. So I think this is the only game in town. I agree with the other guest. Yeah. They're not going to do much because unemployment's staying, nuisantly high. So I think we don't expect much from the Fed, and I do think people are going to be exiting bonds and cash and finally getting into the stock market, though that's not necessarily the right thing to do.
By the way, we mentioned the Fed, the ECB, the European Central Bank's coming out with their meeting notes and the information about what they're planning to do with their currency on Thursday as well. So it's a big week for central banks. Larry, let's focus on a little positive news. Japan. The Wall Street Journal had a piece today about how some of the gloom and doom in Japan is fading away, and there's a lot of optimism now. What do you believe in Japan?
Long term, I don't believe in Japan because I think the fundamentals behind all this is just a lot of smoke and mirrors. What's propelling a lot of this right now is what we call the carry trade. The yen becomes so cheap, people borrow in yen and lend out in other currencies. If that should shift, if there should be some governmental shift, it could be a big problem. I mean, I believe short term, but I think there's a lot of things underneath this. Keep in mind how many prime ministers they've gone through, the financial prime ministers they've gone through in the last 7 years. I believe it's close to 5. They have a long way to go, but it's nice to see baby steps, but it's pretty aggressive at this point.
Okay, well, let's bring it back home, Ron, and talk about futures are closing in just about a minute. Let's head back to Larry Shover, the pits of the CME. Always try to get a prediction of what's happening tomorrow by the close of the S&P futures. What do you see, Larry?
Well, once again, the markets are slow and choppy as once again we're waiting for some very important and vital data points. We have obviously the Fed tomorrow, ADP report. We have ECB on Thursday, and also we have the BLS report, the labor report on Friday. Do keep in mind they're penciling in 150 to 155,000 job ads. Remember, it was 88,000 last month. This could be a game changer. So we're on hold waiting for Friday.
Okay. Friday's the day. Of course, tomorrow is not insignificant with the end of the Fed meeting as well. Larry Shover, good to see you. Well, in the realm